G. Chokkalingam is with us, founder Equinomics Research and Advisory Private Limited. Chokka, good morning. Good to have you with us here. Your thoughts on HDFC and what they've informed the exchanges?
If it is HDFC Limited, I'm not surprised. I saw the figure. All of us know that the real estate sector is going through tough time. Even this morning, we saw the research agencies report that in 7 major cities, the offtake is down by 26%. And it is also getting impacted with the base effect because it has grown too fast and too big in the last 2 decades. On such a large base, when the economy is under stress, it is very difficult to grow. So putting together, I still believe that the valuations are stretched. That's why I've been suggesting not to buy HDFC. Rather, buy something like better than HDFC could be, HDFC Bank, which is still growing at around 15-20% the profits. So I would not, even if today it corrects, I would not rush to buy it because I firmly believe that a double-digit growth is going to be very tough for HDFC in the future.
This is what Suresh Ganpati writes about HDFC. He says that HDFC is creating buffers against potential shocks with respect to some of its exposures to stressed corporates, example SR Steel, Jayaprakash, etc. Despite maintaining the company holds adequate security cover against all its exposures, HDFC Limited has 30% of its book exposed to the corporate sector, and 1/3 of that is to stressed large corporates. In some cases, like SR Steel, the exposure is not to any SPV, but directly to the company's balance sheet. While many banks have recognized SR as NPA, HDFC Limited has not done it till date. It is overdue account classified as a SMA, that is special mention account 2. So that is, we'll see what happens. But HDFC is, of course, one of the blue chips, bluest of blue chips. Let's see what happens. The stock, of course, has not done well recently, and this won't help. But will it lead the stock lower? That is another story altogether. Let's see. You got the open coming up, 16 points on the Nifty, 2 points and 3 points respectively. Now almost in the red now. Yeah, Nifty down 6, Sensex down about 24. SBI starting down 0.5%. ICICI Bank is flat. BHEL is up 1.25%. Flash results today. Hindalco is up about 0.25%. ICICI Bank is down 0.13. Tata Motors is down 0.7%. ONGC up 1.3%. Tata Steel is up 0.5%. Tata Steel saw a big 6% move by close yesterday. Idea is down 0.18%. Bank of Baroda is up, but barely so. HDFC Limited is down about 1.4%. That's about 15 rupee cut. So 1,086 on HDFC. What else? Tata Power up about 2.75%, 68.3. Sun Pharma is absolutely flat. Tata Motors DVR is down about 1%, 274. Reliance is down 1%. Yes Bank is up 0.5%. Infosys is flat. Lupin is up 0.5%, 1491. Tech Mahindra flat. Bharti Airtel flat. Ambuja flat. Nothing. Future Retail, where the specific news flow is starting up about 5.33%, almost 6% now, 136. And you got some other stuff, stocks with news flow coming up on our screens as well. Let's look at Sobha Developers as well, since we are. Yeah, Sobha is up about 4% or so. Tata Steel, I already spoke about. BHEL came up on your screen as well earlier. So there isn't very much there as well. Let's look at Cholamandalam Investment and see what's happening there. The IT department has put up a 200 crore plus tax notice for the company, to the company. So that's it. Maybe we can look at MEP Infra. They've got orders worth some nearly 1,800 crores or so. That's MEP Infra. Stocks up 3%. Let's look at Ashoka Buildcon, which is down another 10% plus. So almost about a 13% cut on Ashoka Buildcon after a 20% cut that we saw yesterday. Stocks down 14 now. It's about 115, 116 coming up on Ashoka Buildcon. It's a quiet, very, very quiet open. The Nifty is down 13 points and the Sensex is down 60 odd points. So settling down lower, not meaningfully lower. I would call this flat, but let's see where things head from here. I got 4 out of Nifty 50 stocks trading with 1% plus gains. Tata Steel is up another 1% today, right at start. So let's keep an eye out on that. 24 stocks higher, the rest down. HDFC Limited is a top loser. It's down about 1.7%. Maruti is down about 1.5%. So near 60 rupee cut on Maruti. Dollar yen, I guess, responsible. You got Tata Motors, which is down 1%. L&T is down nearly 1%. Hindalco, Reliance are the other two losers as well. So these are the top 5 losers on the index. Top 6 losers, actually, on the index. Chokka, what does HDFC factor in if you've looked at it in any detail? I know it's never come up as one of your picks or ideas, so I'm not sure you've looked at it in detail. But do you think the stock can suffer?
No, I looked at the price to book value, a couple of weeks back also. I mean, that's not giving much comfort, because what is happening is that, the entire financial sector is going through contraction in the valuation, multiple price to book value. But this was holding quite strong, but despite the fact that the growth has come down to 10-11%. So therefore, I believe that, of course, there is no question of the management quality. It gives you a lot of comfort. There is no doubt at all. But it's a natural victim of, what is happening in the corporate sector. It cannot escape from the stress, though it's an efficient leader. So therefore, I would suggest that, one should not hurry to buy the stock. If there is a further contraction in its valuation multiple, then one can definitely think of adding to the portfolio.
Okay, 2% lower now on HDFC coming up right now. Let's just look at it's too early to look at mid-cap index, but, I think indices are higher, I mean, that's about it, but barely so, in the flattish kind of zone. Nifty is at about 75.92, so it is almost at the day's lowest point. I mean, it broke yesterday's lowest, well, briefly right at start. So I think let's keep an eye. I was saying how technicians are highlighting the importance of 75.90 as some sort of a marker which they can sort of point to and say, well, this is the reason why we should be bearish, this is the why maybe we should start to sell, etc., etc. Tata Steel, Chokka. So stocks saw a big jump yesterday.
I'm not able to understand. Media says that they are putting it up and sell from Monday. Normally such thing happens for the retail sales. You go to showroom and they start the sale from Monday. But if you are selling the plant, so I don't understand the wording. So that's really confusing. But of course, if they manage to sell at a decent price, I would be very bullish. But I have my own doubt. You look at even India, the steel consumption, production are growing. But suddenly in the latest month, the import has again gone up substantially. So there is a tremendous stress in the world. So in case they sell at a steep discount to their purchase cost, then definitely it can impact the company. If they are able to sell, at least 90% of the purchase cost, then definitely it will be positive, because that.
What percentage is the purchase cost?
Whatever business they purchased in Europe. If they sell at a steep discount, then it will definitely impact the valuation.
It has to be a hugely steep discount, right?
Yeah, definitely it will impact if that is the case. That's why I'm saying, as a thumb mark.
I don't think people are building in any great value from the asset sale. It is just that they expect this to. They're losing money every day, so that should stop. I think that
should stop. As I said, if you lose even 10-15%, it's okay. The things are different now for the steel industry. But in case it is a huge discount, then what would happen? Then the standalone business will again carry over the part of the debt which has arisen because of the steep discount. So that's very important now to look at.
So you write that off as goodwill impairment or whatever, right?
Yeah, right. But the debt would be still there. If you say if you have borrowed 10 billion and if you are taking a hit of 4-5 billion by selling, so the net impact would be some inherited debt on account of the past mistake.
I mean, it can't be 10-15% discount. We know that. Plants are mothballed, etc. There's no way that.
So that is why I'm saying. So I would not buy the stock. Rather, I would sell the stock.
Be careful. Yes.
Short-term investors can sell. In fact, we covered only a month back. We gave a relative call on MOIL, which has moved faster than Tata Steel. Surprisingly,
let's put up MOIL. Let's get out of the wall, please. MOIL. That's manganese ore.
In fact,
which Chokka has kind of
discussed
mentioned
intensively Tata Steel versus MOIL on March 8th. So I gave a relatively better call on MOIL. That has run up faster than Tata Steel. So I would suggest sell Tata Steel and hold MOIL. If there is any minor correction, then you can buy also. Because surprisingly, MOIL has increased the ore prices from anywhere from 10 to 50%, as high as 50%, which I did not expect, which is too positive. Because as I said earlier, also MOIL has got 2 new mines, one in Maharashtra, one in Madhya Pradesh. So this is almost a monopoly in manganese ore. So, and still the cash is a little more than 70% of the market cap. So there is a lot of potential. So I would advise investors to hold MOIL.
Let's just put up a few of these stocks. Ashoka Buildcon. I want to put up Shrey Infrastructure, which is up 3%. I think the Wyome deal has reached fruition. HOEC. HOEC, I think, is up about 4% or so. Maruti, again, 1.5%. The yen thing. Century is down about 1.5%. Stock, by the way, was up about 10% yesterday. That's Century Textiles. Future Retail is, I mentioned that earlier, Future Retail was up about 5%, still there. Adani Power is up about 3% or so. The appellate decision for tariff is today. And Rico Auto continues to sell off. It's down another 5%. The circuit on Rico hasn't opened up in the last many days. It'll come up on your screen again. Fancied stock, popular name, lots of prominent high-profile investors in the name. Rico, R-I-C-O-H, and that has continued to suffer. Ashoka is down about 8%. You saw a 14% cut on Ashoka, is down 8. So that is the other one, which is on your screen. Not this one, R-I-C-O-H, that is Rico. And we'll just look at that as well. We spoke with Kiri Industries, that's Kiri Dyes. It's up about 5% today again. It's done phenomenally well. We spoke with them yesterday in quite some detail. That's the stock, Rico. Kiri as well, let's put that name up. 7% higher now. We spoke to them, long conversation. I covered all aspects of it. And, it's till yesterday, it was up some 90% over the last 7 days or so. Make that 100% last 8 days. So 180 on Kiri as we speak. So that's a big move coming through. Let's also look at Piramal Enterprises. Piramal Enterprises continues to move higher. So it's up 1.7% today. Yesterday was down 2, so it's basically pretty much making up for all of the losses from yesterday. Chokka, quickly, any thoughts on these names?
No, in fact, we covered it a couple of times. This is under our coverage, and we bought also our firm. Yes. In fact, this is at least covered stock.
Yes.
But I am quite impressed by the company. First of all, all of us know the way they unlocked money by selling the business, in pharma space. And then they made money in Vodafone case. And therefore, that gave me a lot of confidence that now they have got into many verticals: financial services, fund management, pharma, healthcare, information management. So I am pretty confident that the company can unlock money by divesting some of these verticals. So I would give a fair value of at least around 1250. So those who have bought earlier, they can hold it. In case it falls, 3-5%, then one can re-enter.
No, is this one of those names you can buy even here? Because
certainly,
as you said, it's not covered that much. The promoters are known to create value, right?
Certainly, if somebody wants to hold for another next 1 to 3 years, one can definitely buy it. Buy it in a phased manner, because we have seen a huge volatility. So don't buy in one go, buy in 1 to 3 phases. But certainly, if somebody wants to hold for 2 to 3 years, definitely it's a great.
Could be
because they're going very aggressive in fund management, financial services.
Various real estate, various.
And they are very smart. I don't think they will burn the money easily in real estate. So I believe that they will end up making money. And also unlocking potential is there in the healthcare business. There are different segments, so they can list them or sell them. So there's a lot of potential.
Okay, Sarvendra is with us as well. Sarvendra, good morning.
Good morning.
I think with the markets now firmly down, today, below 75, 90, 75, 80. What's your view? I spoke to you before the RBI policy. You were saying 25 basis points, markets can easily sell off. 300 points. We got a 2% cut that day, and we're down again today as well. Go on.
Yeah, I think the premise remains the same, that the run-up has been sharp and the run-up has been good enough to then anticipate a correction. So this is a broad correction coming into an already uptrend. So by no means I believe that we are going to sell off below 7250, 7300. So 7450, 75 thereabouts would be a good price area to start putting some longs, at least trying and putting some longs. And if at all we don't, if at all the setups don't deteriorate more than what they are right now, it seems that it is well within the realms of correction. And 7450, 7500 as we have maintained, that target is there for this correction. As of now, we don't see anything much lower than 7250, 7300 worst case. So around 7450, 75, there will be some good buy side trades coming our way. That's what we are anticipating right now. But we are taking each day as it passes and wanting to also see as to how the international markets are behaving. Now, the key concern for me from here is not India or not Dow or not DAX, but the now key concern is coming from the JPY. And JPY, the yen we were discussing last time as well, now it's not behaving properly. It's not behaving as anticipated. It is behaving as it wants to be, but we had anticipated that it will not go much below 110, 111, and we are seeing the ticker at 109.40. That's a cause of concern, because if this continues for a couple of more days and these numbers are there, and then probably yen targets would be in the region of 104, 105. And if that is the case, then probably we have a case for a larger correction globally, and we will have to realign and reset Nifty targets as well.
Why would yen at 105, 104 cause a global sell-off, you think? I mean, just explain that point.
See, the carry trade, yen has not gone below 111, 110 over the last 18, 24 months. This is the first time that we have started to trade that ticker. And there definitely would be carry trades that are done with this currency, and this currency is one big carry trade currency historically. And if you see in the past also, yen has been one of the major carry currencies.
Just explain that. How does one do these carry trades? I mean, just explain it.
See, yen has typically been a weakening currency, and people have borrowed in this currency and then gone into invest everywhere else. Now, if this currency starts to appreciate, the hedge funds who have borrowed yen and gone ahead long, done trades elsewhere in the world, that trade gets unwound because they start losing the basic premise itself. The currency is no longer weakening, and it started to strengthen. And when that happens, they start losing money on the first call itself. That's the basic premise, that the currency will weaken and they will make money both sides. So that premise has gone out of the window over the last 3-6 months, and people on the yen side of the trade have been losing money. So one such panic happened once we cracked from 124 to 115, and post that we saw stop losses getting triggered and a sharp fall from 115, 116 all the way to 111. Now 111 was the long-term support. Now that also getting broken, the stronger hands will also have to surrender and probably square up their trades for once. I'm not saying that those trades will be squared up for life. They will definitely come back, but they will come back at 104, 105 now. So if this were to continue, those trades will be unwound, and again those trades will come back at 104, 105. In between, there will be a vacuum, and that vacuum will lead to that weakness. That will lead to weakness in global commodities and strength in the yen.
Okay, so it kind of sort of becomes a bit of a cycle, right? I mean,
yeah, absolutely.
Yeah, so that's what you're saying. All right, fair enough. Got that. The market has recovered a bit, 76.04 or so. So, I mean, recovered what, 10, 15 points. That's it. Sarvendra, any specific trades you'd want to tell our viewers?
Yeah, at the cost of repeating, metals still on declines and metals looking good, and all metal stocks, even in this decline, metal has been a sector which has outperformed. So that has been our top pick over the last 3-4 quarters. What we don't like again in this bounce is probably IT, the large cap IT stocks, because the view that we carry on the rupee is that rupee is probably heading for 60 to 63 and should not go beyond 67.5, 68. So as long as that view holds, IT remains a pocket of weakness for us, especially the large cap names. We are not shorting the small cap or the mid cap names, but the large cap names to me look definitely weak. Let's see how the numbers are going to come, and if the numbers.
Yeah, I think we lost the line there. So he'll just be back with us, should be back with us. 15 odd points lower on the Nifty, 75.98. Chokka, have you ever looked at Kiri Industries?
Long back it has run up, so I lost the track of the company now.
You know, interesting. They've suddenly decided to reduce debt by half. But they bought a company called Dystar, which is the largest color company in 2010, out of bankruptcy.
Yeah.
That now, I spoke to the management yesterday, has made $100 million profit, $100 million profit. And Kiri holds 38% in that company.
That's true. If they turned it around.
Yeah. I mean, profits attributable from that would be much larger than what they do standalone here.
So but stock also has run up.
It's doubled, basically.
Yeah. So I would rather wait for any
correction.
Literally
doubled. I mean, 7 days, right? I mean, you'd think that these kind of returns don't exist.
You know, small cap, if you have to capitalize the gains. You should not become too greedy, because if you see 9 out of 10 small caps, the kind of wealth they create, they find it very difficult to sustain that. market is cyclical, the business is cyclical. So normally this kind of wealth is not durable for many. So you see the history. I mean, it gets repeated. There are exceptions.
Yes.
Like Phoenix Mill was a small cap. You would be surprised. Its market cap was 23 crore in 2002 when I landed in Mumbai. Same thing became 4,000, 6,000. Even now it is very large. So exceptions are only about 10% from the small cap space. So therefore, I keep saying retail investors that they should utilize this opportunity and make money for themselves.
Basically, learn to book profits, essentially. Don't,
If not fully, at least in phases.
Yeah.
Unless it is a great appealing company with excellent growth potential to emerge as a large mid cap or large cap. Because for that matter, even Infosys and Wipro were mid cap stocks in the early 90s. So unless you understand that kind of potential, you should start booking profits.
Usually that only becomes clearer in hindsight, right? Yeah. So that's the issue. Chokka, thank you for that for now. Chokka, I request you to stay with us. I'll come back to you. Sarvendra, thanks very much for your time. Appreciate you joining in.